Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, today we're going to take a look at catching trend reversals. Now, trend reversals means different things for different people. What I'm looking for here is how it ties into my trading strategy. And my trading strategy is typically swing trades. So I'm looking to hold trades, sometimes just a few days, but I would say on average like 2 to 8 weeks, somewhere in there. You can use these same strategies intraday, but you would just adjust the time frame. Whereas I'm on the daily here, you would just be on the 10-minute or the 3-minute or whatever. But this is the way that I look to play trend reversals. And plug is a pretty good example at the moment, actually. So there's a few ways. One, we're going to start with EMAs. We're going to talk about that here in Webull, and then we'll flip over here to Thinkorswim, and we'll talk about using the channel and the ATR levels as potential reversal catches as well. So EMAs, this is one of my favorite setups. So I look at the long-term EMA that I have here. This is the 183. That's the gray line here. So if I'm looking to catch stocks that might be trend reversing from downside to upside, so I can simply play shares or calls or whatever, I'm typically looking for stocks that are under the 183 and looking for potential crossovers of the short-term EMAs, meaning like back here you see the 8 is the lowest, then the 21, then the 34. That's a fully bearish formation. What I'm looking for is for that to start to flip. And so I look for the bullish crossovers of the 8 crossing above the 21, above the 34, and then the 21 also crossing above the 34. So everything gets into bullish formation here on this candle. And so, if I'm looking for opportunities to jump into a reversal play, that's what I'm looking for. The bullish crossovers happen. So if I had, come in here on this day and say I caught around 240 or something, then staying in this play until I get a bearish crossover the other way, which hasn't happened yet, right? This white has not crossed over the red. And so, this for me would still be in play. And I like the being underneath the 183 because the 183 is a very, very strong resistance level when the stock is below it. You can see that right here. It wicked off of it pretty hard. However, it was able to regroup and make another attempt and pushed through it on this day where it jumped almost 20%. And then it came back down, and right now at least it's re-engaging or wrestling with that level again. So it gives a good opportunity for sort of like a big breakout point, meaning, I typically look at stocks that are under the 183 as being in a bearish trend, right? You can see plug has been that for a long time. And so if it's above the 183 and it has price action that is putting it above the 183, then I consider it to be in a bullish trend. And so here looking for a trend reversal, right? Based on the name, I need something that's in a bearish trend, and I'm looking for it to switch to a bullish trend. Now, the thing I would say, part of the reason this is hard is because it is very hard, especially for a lot of these stocks that are pretty low price. They've been under duress for a long time. You look at like NEO right now is also bearish trend, right? Pretty long-term bearish trend at this point. Briefly had a flip to some bullish trending, but that didn't last very long. So, it's not having a lasting trend reversal, but that's not necessarily what I'm looking for, a lasting trend reversal. Because again, if I'm only in this for sometimes a few days, but just say 2 to 8 weeks, it doesn't matter to me if it enters into a 5-year trend reversal, because I'm looking to sort of get in, find a swing play and get out. So right, this would have sufficed for that for sure. I could have gotten into this one in the 4s on September 5th, and then when it started to cross over, I could have gotten out in mid 5s. So a pretty good percentage gain. I wouldn't, maybe trimming up here would have made sense because it was getting so extended. So maybe locking in some greater profit there, and then as it came down here, seeing, okay, the bearish crossovers are happening again as it's getting toward the 183. And so, yeah, stocks of this nature oftentimes continue to be of that same nature. So again, didn't matter that it was a brief trend reversal. That's all I'm looking for. That's why I'm on the daily. I'm not playing it on the weekly, right? The weekly, it's nowhere near. I'm not playing it on the monthly. I'm playing it on the daily. I'm looking for, like I said, 2 to 8 weeks. So this may end up to just be sort of like an attempted brief trend reversal. I don't typically count the trend reversal until these short-term EMAs are also crossing over the 183. I know some folks just say, if the price action is above, it's bullish. If price action is below, it's bearish. It's probably a little bit more of a conservative approach on my end, but I don't sort of give it those labels or those monikers unless I see the EMAs crossing over as well. Then I feel more comfortable going bullish or bearish. So that's the one way that I look at catching a trend reversal. Look for a stock that's under the long-term EMA. You don't have to use 183. You don't have to use any of these that I have, 8, 21, 34, 183. You can use whatever works for you. And you also don't have to have 4. You can have 7. You could have 2. Like it, you have 2 that cross over each other, then there you go. You have that. I know some folks just use like the 50 and the 200 or something like that, something shorter term, something longer term, and kind of go from there. But this works for me. So this is why I do it, or why I use it. But looking for price action underneath the long-term EMA and looking for the short-term EMAs to appear as though they're going to cross over, and then when that crossover happens, jumping in and seeing what it does as those short-term EMAs approach the long-term EMA. It oftentimes gets quite hairy. AKA, it also fails most of the time. But that doesn't mean your trade fails, right? It's just it doesn't follow through to a full trend reversal, but you still caught something of a periodic reversal, a periodic jump in the price where it was previously just sort of scaling down more and more and more and more. Now, I don't know if AMD is really like a great example on this. Maybe we'll go something like SoFi. Okay, so let's look at catching a trend reversal to the downside, but this would sort of suffice in either direction. So here I have this channel set up, right? And so ignoring these ATR levels at the moment, whenever price action gets out of the channel, right, it's always a good time to start looking for brief reversals, because what we're looking for is when it's out of the channel for it to re-engage with the channel. And we often look for that to happen sooner than later. This was actually a pretty lengthy run. This is much longer than a typical run outside of the channel, at least for like SoFi. It spends a lot of time in the channel. But, looking for a period at which it's outside of the channel, and then knowing that, at some point it's going to re-engage with the channel. And you can do this if it's out of the bottom of the channel as well. I don't know if we're going to have, you would think we would have an example here. Let's look at something like charge point, maybe. Yeah, looks like we have some out the bottom. Yeah, so like this is a pretty quick move, right? It fell at the bottom of the channel, and it was like staying pretty close to it, but it was also coming to this ATR level, right? So it might catch some support there, and it did, and that was enough to groove it back into the channel. Ultimately, it continued down further, so you didn't get like reversal, but it at least gave you an opportunity to say, okay, it's extended really far in one direction or the other. I know some people do this with RSI and whatnot. I think I get a better read on it from the channel. When it's outside of the channel to the upside or the downside, then I say, okay, it's a little overextended to the top, or it's a little overextended to the bottom. And then that just tells me, hey, here's something to watch. Then typically I would come over and I would just, capture it with my EMAs. And I'd say, okay, this basically served as a screener for me, right? It said, stock price is out of the channel. Keep an eye on it. And instead of using this then to make the sort of like buy or sell decision, I would come over here and use the EMAs like I talked about before. So in that case, like I said, this acts more of like a screener than anything, but that's tremendously helpful because finding stocks that are in play or have some potential for a play that you're looking to make, is like half the battle at least, right? It's like, where do I find stocks to trade, right? That's one way. Look for stocks that are outside of the channel here. And you can just flip through them. You can set up a scanner to look for stocks that have had, big moves recently. That's a good indication that they may be outside of the channel in one direction or the other. And then the ATR levels, if it is outside of the channel and it's approaching a level, right here, you saw it got some pushback toward the channel. Ultimately, it bounced off of it, but it did push back toward the channel at this level, and then up here, instead of going through this call trigger level, that's where it hit strong rejection. So that's sort of like some added layer of potential there. It's outside of the channel and it's hitting like a full +1 level, or it's hitting a new monthly call trigger level. Maybe then you get some pushback, but even more than that, like I said, my preference, what I feel more comfortable and more confident in, and I actually think it's simpler, is just seeing what's out of the channel to the upside or the downside, and then coming back here and working off of the EMAs in the exact same way, like I mentioned before. To me, that's sort of like the best way to go, right? Because if you see it's outside of the channel, if I were wanting to play SoFi to the downside, like now would be about the time where I'd consider getting in, or maybe I start to like get in little dribs and drabs, right? Because we have the 8 cross over the 21. What I'd really want to be looking for is the 8 to cross over the 34, which could happen any day now. It looks like, unless something happens and it gets a bounce back, it's looking like it wants to happen. So that's why I'd sort of start to scale in probably at this moment. And it would have just been on my radar from seeing that it was spending so much time out of the channel, and say, okay, where's it going to take a breath? Where's it going to pull back? Maybe that gives me an opportunity to play that downside. And so that's where I would look for it here. And I think that this gives me a better grip, a better view on when to get in than necessarily this does. This, to me, feels a little bit more shaky, but just different things sit better with different people, right? And so maybe this makes a lot more sense to you and you'd want to do that. Or, maybe whatever else it is, maybe you just work off of levels, right? And you have supply and demand zones, or support and resistance levels, whatever it is, true ranges, anything like that, that works for you, great. But I would say, using this as a way to look for potentials of things that might reverse, long-term EMAs, being outside of channels, and then reverting to whatever it is that you typically use that seems to work well for you to give you the buy signal and the sell signal, and then following those things. Don't forget to follow them. But I think that that's probably the way in which you could take the most confidence in these things is still working off of whatever you find to be the simplest and the clearest for buy signal, sell signal. And then you can kind of use these other things as, hey, here's some stocks to keep an eye on. Because I've run into that issue many, many times of how do we even find stocks to look for that might be setting up some sort of a play that I'm interested in playing. So that is a big piece of the puzzle. All right, folks. Well, good luck catching reversals out there, whether it's upside to downside, downside to upside. And, it might take just some fiddling around with it to figure out what works for you. But don't worry about what works for other people. If it works for you, keep it. If it doesn't, look for an alternative, and hopefully at some point something will sort of make sense and will stick. If you watched this far, I really appreciate it, and as always, I will see you in the next video.